Today, we're talking about market structure once again. To continue in this topic, we're going to separate it into three parts: outer market structure, inner market structure, and dealing ranges. When we talk about outer market structure, like in the previous video that I made before, we're talking about the major swing highs and major swing lows, the breakout structures, and the changing structure. When we talk about the inner market structure, we're referring to the movements done in between those major highs and lows, every breakout structure or every change of character inside those moves. And sometimes can be observed that we're going to see the breakout structures from the major swings as well. When we talk about dealing ranges, we're talking about a significant high and a significant low, which usually are used to identify a range in price where we would see some sort of reaction from. Usually, we use the most recent low and the most recent high. Let us hop into the charts and see some examples. Let us look into this example. This is USD CHF on the 30 minutes time frame. All right. Take a look into what price has been doing so far. So far, so good. We see here that price has been ranging quite for some time. Okay. And then we saw a high here, a low still inside the range, right? Made a new high and then made a new low. But now this low actually broke the structure. All right. So from this high all the way to this low would be our dealing range, basically. All right. So anything inside that happens inside here is still inner structure. All right. Then for outer market structure, we see here that this is our high and this is our low. And when it comes to inner market structure, we see high, a low, a high, a low, another high, another low, high, another low around here, high, low. Then we now start to change structure here, right? So we now make a high, a low, a new high, and then we now have a new low. But then this time around, this low here is actually below our major low here. So this one is a new low from the major market structure. That's from the outer market structure. All right. So now let's take a look into what price will keep on doing. Okay. Meaning that our new dealing range now from this high all the way to this low. Remember, we want to use the most significant high and the most significant low. Usually, this is the previous or the most recent swing high and swing low of the outer structure. All right, not the inner structure. Now let's check what price has been doing here. Okay, like we are ranging. All right. Now, for us to change the trend, we need to see a break above this high. For us to keep on going with the trend, we have to respect this high here and then go below these lows around here. All right. Okay, so we see here we have a breakout structure to the upside, right? So now what happens? This here becomes our new low, and then our new high is going to be formed once price starts to retrace. Okay, we retrace down here a little bit, right? Then we now formed a new high around here, right? So basically, this is our low, this is our high. Okay, whatever point of interest that we find over here could actually be used to take price to the upside. Okay, we're not studying about point of interest today, but we're studying about market structure. All right, so let us keep to that. So price came back down again, found a POI, and then started going up from there. What happens next? We made a new breakout structure, right? So this here is a new low. This here is a new high. So basically, from this low to this high, it becomes a new dealing range. As you're coming down here now, price is going to find the PY within this low and within this high here, and then continue going to the upside. Now, the only moments where we're going to see price going back to the downside, that is breaking this low here, is when we have an invalidation, and that invalidation is usually going to lead to price changing structure. All right. As you can see, we broke the high once again. So we made a new low around here. Okay. And we made a new high around here. Now, this is outer market structure. All right. So now this means that this here is our new dealing range. All right. From this low all the way to this high over here. Now, what about the inner structure? Okay. In inner structure, we have this. Okay. Price came here, made a new low, high, low, high, and low. Okay. But this one is inner market structure. Right. Then a high here, another low, and a brand new high. Okay, even if this high here is actually higher than this one, it's still part of the inner structure and also part of the outer structure at the same time. All right, because this one is a whole new high on its own. All right, so now since we made a new high, okay, above this one here, as of the outer market structure, we're going to be expecting price to come back inside our daily range, okay, find the POI and pump from there. Since the price is ranging for a while, and then eventually we make a new high, right? So what happens next? What do we have here? Okay, this here is your new high, right? So basically, this is the most recent low, okay, or the most significant low that I'm seeing here right now. So from here to here is the green range. Price started down here. So basically we've already gone down and then it's going up again. Now, I want to make mention of something. Price can react to both outer market structure and inner market structure, right? As of this point, price came back down here, reacted to a PY that was around here, and then started going up from there. Okay. So yeah, just to mention that. What do we do? We broke structure to the upside. Okay, a new dealing range is being formed. This is your low, and whatever high that we form here is going to be our new high of the dealing range. All right. And as you can see, price keeps doing that. Okay, keeps making new highs. Broke structure, made a new high, came back down again. Now it's going up, right? Let's see if it's going to continue going up. Kept going up, made a new high again. All right. So far, so good. We are in a bullish structure. Okay. In this example, we're going to look into Euro USD on the 1 hour time frame. All right. So let us see what happens next. We break to the top side, right? So basically, this is a breaker structure, isn't it? So basically, we are forming a what? A new range, okay? And at the same time that we're forming a new range, a new high is going to be formed, and eventually, market is going to retrace, creating a high, okay? So we have here this as our low and this as our high. All right, this is the outer market structure. Now, we normally use the outer market structure to make up our dealing ranges. Okay, unless maybe you're seeing some, something different in the inner market structure, but that's more advanced. All right, so in our level, let's keep up to this. In the market, when it comes to outer market structure, we normally use it for a dealing range. Okay, to define a dealing range. So this high, this low, this here is our current dealing range. Why? Because this here is the most significant low that we have here, and this is the most significant high that we have here. Okay, so basically we're going to look into this to look for some POI, a point of interest where price could actually pump from. Okay, now what those inner market structure has to do with all this? Okay, from this low all the way to this high, do we have any other inner structure there? We do actually. We see a low here, we come here, make a high, make a low, all right, and then we make a new high again. So basically there was a low and there was a high as part of the inner structure around here, all right. So if we keep on moving, we see that we actually make a new low around here. So I believe that this is going to be our outer structure, all right. And now whatever new high that we're making there is going to be also part of the outer structure, all right, until we start to see a retracement. Okay, in the meantime, you see here that we had a lot of inner market structure going on around here before we actually had that pullback that we can actually confirm as a nice retracement. All right, we're retracing once again. So basically, there's going to be more inner market structure there. We see here, this is our high, this is our low. Come down here, make a low, here, make a high, a low, a high, and another low, right? So far, so good. This is the inner market structure that we can see inside this particular dinner range. Remember, every new low and high in the outer structure makes up a new dealing range. All right, most times actually. So you see there, price dumped a little bit more and then shoot up from there. Okay, so what does that make of this? This here is your breakout structure. So this is your low, this is your high. Okay, price has come back down again. So we're going to react to some POI around here and then continue going up if price wants to keep on going up. Okay, notice that we don't actually go below this low here. Like I said, this low to this high is still part of the outer market structure. All right, that's basically the way it is. Let me actually um demarcate it from here. All right. So basically, breakout structure, breakout structure, breakout structure. Okay. So this is your low, this is your high. This one is your dealing range. We're going to react to something here, and then price is going to push it back up. In some videos, I'm going to actually talk about this point of interest, which we can describe as POI. Okay. Usually come in form of fair value gaps and other blocks. Sometimes some other stuff like key levels, support and resistance, all of that. Okay. So it's not just limited to fair value gaps and other blocks. So price is reacting to something and we're now pushing up again. So what happens here? We're now making a new whole dealing range. All right. So we now notice here that this is a breakout structure. Okay. This here is our low. We're making a new high. All right. And price eventually is going to come back and do what? It's going to come back and trace. Okay. Inner market structure says what? We had a bunch of highs and lows around here, but so far so good. It's basically a smooth journey to the upside. Okay. There we go. We have our retracements. We have started to retrace. Okay. Inside this low and this high, or let's just say our dealing range. All right. We are seeing a lot of inner market structure right now. Okay. And most times, if you're skilled enough, you can actually take out some trades inside this place. Okay. As price keep on going down. So basically, what I'm saying here is that we are making new lows, all right, inside the range. So I'll consider this as inner market structure, right? Until eventually we begin to make new highs, okay? And once again, we have gone above making a new high, which forms what? Another dealing range. All right. So basically, price is going to come back down once again, react to something here, and keep on going up. Okay. The invalidation to that is if price eventually comes down and breaks the low. Okay. So that's the only point where I'm going to become bearish. But in the meantime, I'm going to be bullish until price says otherwise. All right. So even though market did all this around here, okay, price kept on going up and down, up and down, up and down. None of that makes it a new major high or a major low, okay, until you now see the final piece, all right, which is the breakout structure. That breakout structure is actually what's going to mark out your major low and your major high. Okay, the major high is usually when, please, in this scenario, I'm using the bullish instance here, okay, because price action here is bullish. So what I'm saying now is that um, this low is going to be marked out once we see the break of structure from the major high, okay? And our new major high is now going to be seen once market starts to retrace, okay? So until we have the retracement, we don't really have an established high the range yet, okay? But our dealing range is from this low to whatever high we make. Now, inner market structure is all this that you're going to see inside the dealing range, all right? So that's basically it on a nutshell. Let us keep on looking at what is happening here. Price keeps going up, right? Let me give it a pause here. So at times, market might not want to have that pullback that's going to go all the way back inside the range. All right. Sometimes it just keeps on going, and that's okay. All you have to do is keep on looking for new market structure. All right. As you can see here, we made a little bit of a low here. We made a high, low, but this one now, all this here is inner market structure, right? We made a new high, although I don't really consider this as a new high because of how it happened. Okay, but on a nutshell, the most significant low that I'm seeing here is actually this one. The most significant high I'm seeing here is this one here. So this here, from this low to this high, is my dealing range. And whenever we invalidate this low, that's when I'm going to become bearish. We invalidated the low. Okay, so this is now a sign for me to become bearish or start looking to the bearish side. Now we started to retrace, right? And I think this is where the bar replay actually ends. So yeah, I'm going to be bearish from now on, okay, on Euro USD. Okay, as you can see from here, this is our low which got violated. All right, so now we're looking to the bearish side. What happens next is that we're going to see some sort of POI around here. We're going to react to that POI and price is going to start making new lows. That means we're going to start to expect a break of this low and price keeps on going lower, making new lows. Meanwhile, we don't really see much of new highs. All right. So yeah, this is another example on EURUSD on the 1 hour time frame.